there's a lot of components that come after you've made an offer that can still swing a lender's decision, but you know, it's pretty much out of your hands. Now, how can you basically try your best to ensure that that decision, more often than not, comes back in your favor? So what can you control? This is where we get into your credit report and your credit history, okay? So me personally, I'm going to give some direct examples of stuff that's good, that positively affects your credit report. This is really important stuff because it's basically like dating, right? It's basically like going on Tinder, looking at a profile. Say you are, as a borrower, the profile, and is it swipe left or swipe right? I don't know, I'm married, right? But I think swipe left is a yes and right is a no. If it's not, let me know in the comment section below. But for a yes, you're going to have at least some of these factors that positively affect your credit file, okay? The first is having active and long-standing credit accounts, okay? Now, what is a credit account? A credit account is, according to the big three credit agencies being Experian, Equifax, and TransUnion. A credit account is a mortgage, a bank account, okay, just a regular bank account, any loans, credit cards, utilities accounts, so like British Gas, Thames Water, any insurance premiums, okay? Those, you want to have those types of accounts on your credit file. Now, some people might think counterintuitively, they might be like, well, no, if I don't have any loans or any credit cards, surely that's a good thing because I'm not borrowing. I'm using my own money to pay for everything. So surely that's a positive effect, but it's actually not. It's not a bad thing, but having a credit card and a loan, you're basically demonstrating that you can take out credit and you can repay it on time and settle it over time. And if a lender's looking to do that, they want to see that you've done that with other lenders, okay? I hope that makes sense. And a long-standing account is anything over like 3 years, basically. So at 3+ years, so I'm talking a credit card that's 3 years old, a loan that's 3 years old, a bank account that's 3 years old, utilities accounts, etc., etc. That is a good thing, okay? Now, the caveat over all of this, guys, is make sure, if you remember nothing else from this video, that you repay your payments on time. And we'll get onto this, but basically, late payments on any of those types of accounts is going to negatively affect your credit account seriously and have serious consequences. So remember that, okay? Also, having a high credit limit. So we talked about those credit accounts. And again, this one's going to be seem counterintuitive, but having a high credit limit, I'm not talking about a credit limit of 20, 50, 100,000 pounds. I've looked at the various credit rating agencies and anything above £1,000. So it could be literally £1,001, whatever. That is actually a positive effect on your credit score because it demonstrates again to lenders that other lenders are willing to lend you large-ish, amounts of money. If you only have credit limits under £1,000, that will signal to a mortgage lender that, hey, look, other lenders aren't willing to lend this person that much or an amount above £1,000. What's wrong? They're not a good candidate to lend to. Now that might just be because you've said, look, I don't need £1,000, I only need 500, 250. But if you want to have a positive effect on your credit score, have at least one credit account that's above £1,000. Now on the flip side, you don't want to have a credit limit that's too high, okay? So I've said above £1,000. Now if you have what is called a revolving credit facility, which basically means an overdraft. If you have a single overdraft above £15,000, now let's face it, most people don't have that, but if you have a single account above £15,000 and your total credit balances are above £30,000, it may decrease your credit score. It may decrease it, okay? And then also sticking with credit accounts, so I'm talking specifically about loans, overdrafts, credit cards. If you have too many, now it doesn't define how many is too many, but lots. Let's use some common sense here. If you have like 6, 7 different credit cards and loans, okay, that can negatively affect your credit score. You want to have some, but you don't want to have too many because then that indicates that you're reliant on debt and credit to live and basically fund your day-to-day spending. So it's all about balance with these credit accounts. And also a couple of the things that help your credit score is being on the electoral register, so being registered to vote. Even if you think, as I do as well, that the governments in this country have been an absolute shambles for the last 5 to 10 years, still vote because it actually positively affects your credit score. And also having settled credit account. So if you've settled, and when I say settled, I basically mean you paid it off over time. So if you had a loan that you paid off over the course of 3 or more years or a few years, credit cards that you've paid off, don't forget to close some of these accounts. We talked about having a few open, not too many, but if you have one that you don't need, close it, okay? Because it basically draws a line under it on your credit score, and it says this person has had credit card or a loan for X years, they paid it off, they closed it, job done, tick, this person's reliable, they can do a credit facility from start to finish, and they're good for it, okay? And again, I'm gonna say again, no late payments, okay? And that also applies to utilities accounts. So if you've had, gas, electricity, water at previous addresses where you've lived and you've paid it off, closed it down, and then moved, okay, that will show up as a settled utilities account, and that's a good thing for your credit score. Okay, now let's talk about some bad stuff that you really want to try not to do, just in general, because this applies to mortgages. This channel is all about property, but your credit score is going to help you get mobile phone contracts. It's going to help you get credit cards, loans, jobs. Jobs check your credit score these days, and lots of other stuff. So it's really in your best interests to have a good, healthy credit score, okay? Late payments, we already touched on this, but this is number one, avoid them like the plague, okay? New credit account, try not to open a new credit account, so that's a new credit card, a new loan, balance transfer from one credit card to the other. You might think, oh, I'm just transferring my balance from one credit card to the other, I'm not actually taking out a new credit card, but you are actually taking out new credit, so avoid that. Even like utilities and mobile phone contracts, try and avoid those within 6 months of applying, okay, for a mortgage. So you don't want to have any recent new credit applications on your credit history, because this will negatively affect your score. And then lastly, this is a key one, when it comes to overdrafts and credit cards, it really is in your best interest to pay these off as much as you can, okay, month to month. So having 100% utilization, specifically of credit cards. So if you have a credit card and your limit is £1,000 and it's always at £1,000, you never pay it off, that's not a positive effect, it's actually a negative effect on your credit score, because it signals to lenders that you actually don't pay back your credit and your bills and you're reliant on debt, okay? So those are the main ones that I wanted to highlight. There might be lots of others, okay? There's lots of others. Put them in the comment section below, because I can't cover them all in this video, but those are some of the key ones that I've personally experienced and that I've seen through logging in to my personal credit accounts on Equifax, on Experian, on TransUnion, and seeing how they break down these components. Really important also, guys, to check your credit score. I'd be checking it, if you're looking to apply, if you're looking to buy a property, start looking at months ahead, okay, of actually going out to valuations and starting to talk to brokers, mortgage lenders, because it's better to see stuff on your credit file that's negative early. Try and fix it before you come to actually doing that full underwriting. And you can do a good amount of repairing on your credit score in 3 to 6 months. So be looking at your credit score regularly, full stop, but especially if you're coming up to looking at properties. So guys, I hope that helped. Mortgages and lenders, it really is a subjective area of property. You might get accepted for a mortgage by one lender and rejected for a mortgage by another lender. You are the same, you haven't changed. You're looking at the same information, the exact same information, but a lot of these lenders have different criteria. So do the best you can in terms of what you can control to put yourself in a good position. Guys, thanks as always for watching and supporting. Please like and subscribe. Send this channel to people that you think would benefit, because that's how these channels grow, and I'll see you on the next one. Thank you for watching. This year I'm making a video every month to answer any questions that you have for me. So whether you want to know whether you should invest in a limited company or in your own name, whether you should buy a flat or a house, what is the best way to get started in property, or who my barber is, just let me know. You can ask me in the comment section below, on Instagram, on TikTok, and I'll make a video dedicated to your questions. Like and subscribe, and thanks for watching.